We're good?
Let's kick things off.
Awesome.
Mr. Jordan, how did you actually first? How did you find us? I'm curious because like I saw that you had like booked a call with us, and I was like, I saw you on Twitter. I was like, man, he's like big on Twitter, like crushing it trading. But I didn't know like how you found us
Yeah.
initially.
I found you through someone who works on my team, actually. He was telling me about doing short form content. He said, I know someone in Miami. I said, perfect. We'll book a call, see if he's cool. And you seem pretty cool on the on the call. So
Appreciate it.
that's how I found you.
Cool, and here we are. So
Yeah.
basically, in this pod, I want to dive into like kind of your journey. You've been trading. You told me for 6 years. I saw that it took you 3.5 years to get to that profitability level. So I want to talk about, you're a young guy. So if you've been trading for 6 years, obviously you got started when you're like 16. So
Yeah.
I want to talk about. I don't know if there's anything you want to cover like before being 16, or if you want to kind of start off, like just run me through your journey of, how you got started, how you got into trading, and what sparked your curiosity. And then obviously you didn't give up in the first 3.5 years. So like what kept you going?
Yeah, totally. So when I was 16, I got my first job at Bed Bath & Beyond. And obviously now it's like a meme stock.
Mhm.
But back then at the time, I was just looking to get some money. After the first shift, I knew like it wasn't going to work. I was like, I hate this. I can't do this. And so I go back home, I go on my computer, and I say, okay, how do I make money online fast as a teenager? Probably something
Yeah.
everyone's looked up. And I come across this guy who's penny stock trading, and he makes like $2,000 in like 2 minutes just by, pushing a few buttons on his computer. And I was like, I can do that. And so, from there, I start learning a little bit more, I figure it out. So I go and try and fund an account, and I'm trying to get over the PDT rule, right? But you can't do that unless you have over 25K.
Mhm.
Obviously, I didn't have 25K. So I'm like, okay, I got to go through this offshore brokerage, so that way I can, trade more than 3 times a day.
Yeah.
So it's this whole process. I finally convinced my mom to help me go to the bank, wire $1,000 to this offshore brokerage. I set up the account, and I blow up the account in 3 days. I lose it all in like 3 days. And I'm like, okay, obviously, like, I don't know what I'm doing, but I think this is something I can stick with. And I think this is something I can get to work. And so that kind of started the initial journey of, how I got into trading and where I am today.
Gotcha. That's super cool. As far as like, I mean, not blowing accounts, but like
Right.
getting started. Because I know like for me, when I got started, I was trading options, so I was like really trying to get over that PDT rule as well. And I think I started with like $1,000, and I blew it, and I put like 10 grand in, and then I blew that, and then I put 25 grand in to get over the PDT. And guess what? Like taking more trades definitely didn't help.
Yeah.
I grew it a bit, and then I blew it. So, I think blowing an account is like you really learn from that,
Yeah.
and it's like it's a mistake where it's like you blow it, and you're like, man, I really did something wrong here. Like I need to like kind of go back and track what that is. And if you could talk about like kind of just like some of the things that you learned from, obviously that initial, I don't know if you blew any other accounts along the way, but if you can talk about like kind of the first count, you learn something and then you apply it to your next one, then you maybe do something different and you keep going, and kind of talk about that progression that you made.
Totally. So probably in my life, I've probably blown up maybe 15 accounts, maybe a little bit more. I always had the issue of blaming the strategy. So I would find a strategy or maybe take a lurch from like a Discord. I never really had a real plan. And so I would get it maybe a little consistent, maybe make a little bit, and then I would kind of blow it up all in one day. And I would say, okay, I'm going to find something else to trade, something else to work. And so throughout like the first few years, I was always hopping from penny stock trading, options, futures. I tried everything. I've tried every strategy under the book.
Mm-hmm.
And eventually, like once it got to the point of like, okay, clearly it's not the strategy. Like everyone trades with different strategies. A lot of these strategies work. Why am I still losing money? And it came to the point of like, okay, obviously like it's going to be my emotions, my risk management. Like I'm getting emotional. I'm not following my plan. And with risk management, I'm like, I get emotional. I get greedy. I don't get out when I should. I'm risking way too much of my account. So when it comes to blown up accounts, for me, it was always like, I just kept moving on to the next strategy. And it wasn't until I was like, okay, I need to just pick one strategy, work on it, like maybe tweak it a little bit, get it to work, like find a real edge. Once I do that, then I'll start making money. And that's exactly what happened.
Gotcha. So what I guess, in the first, I think for a lot of traders, in the first kind of year and a half, maybe even 2 years, it's a lot of like strategy focus, right? Learning how the market moves. And then you can get like an understanding of like how the market moves. But then it's really just kind of controlling yourself and controlling your emotions and your disciplines. So in that 2 year mark to the 3.5 year mark of profitability, what did your kind of emotional and psychological journey look like?
I mean, it was horrible. It was like, I'm basing trades off of my emotions. Every time I would take a losing trade, I'd revenge trade, try and make it all back the next trade. And I never had a plan that I was just following. I think a lot of that also, and this is a huge thing I've realized, is that you need discipline outside of your life. Because I was a very undisciplined person. I had no motivation. I wasn't working out. I couldn't stick to anything. Like, I was just going to like school, going to college, and that was it. And once I figured out like, okay, I need to get my life in track, that really started to translate into my trading. And so once I finally started, okay, I have a workout plan, I'm sticking to it. I started doing the like stupider stuff as well, like cold showers, like all that like kind of stuff. And it wasn't really that like cold showers helped, but it was like the fact that I was able to stick to them.
Being consistent with it.
Right. It translated into my trading. It was like, okay, I know trading, like, if I just stick to my plan, like things are gonna work out.
Yeah.
Yeah.
I think a lot of people, recently, and I'm not like blaming Alex Hormozy for this, but he's like, oh, I just like wake up and work. But I don't think most people are really capable of that because they don't have that consistency in their life. And, it really takes a lot to build consistency in habits. And when you don't have any sort of consistency in your life, which most people don't, and then you try to go and trade, then you don't have any consistency to carry over. You have nothing to compare it to. So you're trying to be extremely consistent and disciplined in one area when you don't even have it in any of the rest of your life.
Right.
So, like a cold shower isn't going to make you successful, but the lesson of consistency that you gain from doing it every single day is definitely going to attribute to it for sure. Yeah. So it's more of like the daily consistencies and the habits of like showing up and doing hard things every day. I think something that I heard is like if the emotional like capacity and like the psychological effect of trading, if that's like the hardest thing you do in a day, then like that's a problem. Like you have to do other things that are harder than that outside of trading, because then when you get to trading, it's going to feel like a breeze. Like it's not going to be as difficult. So if you could elaborate on that psychological shift that you had, like what was like, some foundational things, like I have to do this, and I have to do this every single day, no matter what. Like what were those things for you at like that 3.5 year mark that really made all the difference?
That's a good question. So the first thing that I kind of realized that got me into this was that trading is so tough because you can do everything right and still lose money. And that's just the nature of the game. And for me, when I realized that, I'm like, okay, I can't take losses personally. Like losses are going to happen whether I follow my plan to a T, whether I have a 90% win rate or whatever. Like obviously I don't, but even if I did, like I'm going to have losses. And realizing that and be like, okay, I just need to accept the loss and move on, that really helped. And then when it comes to like really getting over the emotional side, once I figured out like, okay, because I use this all the time, I call it the casino effect, right? If you're the owner of a casino, you're not stressing, pulling your hair every day that you're going to make money, right? You know you're going to make money because it's rigged against you. Yeah. And so what I tried to figure out was like, okay, if I just make a trading strategy that like works, right? Like over the long run, it has a high win percentage and a good risk reward, I'm going to make money. And it's as simple as that. So if I just have the discipline to follow that, I'm going to make money from it. It's really nothing else to worry about. So that was a big key thing that really helped me out.
For sure. I think like just putting the odds in your favor, like you said, that was a really great example. I've heard the casino example before, but in the way that you said it, where it's like the owner of the casino isn't stressed out pulling their hair out, like, am I going to lose money today? Right. Like, they know that the odds are in their favor, and eventually they will make money, right? Given enough time, like, the odds will play out in their favor. So I think once you've proven to yourself that you have that edge, like, that's a matter of what it is. You come to the markets every single day, and it's not like, am I going to make money? Am I not? It's like, no, like, the odds are in my favor. So, like, all I have to do is show up and stick to my plan. And, the biggest thing is, like, keeping the odds in your favor, not giving them back. Like, because with trading, you can be the house or you can be the player.
Right.
So you have to choose and hold yourself to being the house every single day.
Exactly.
Otherwise, you will turn into the player, and then the odds are not in your favor, and you will lose.
Exactly. And it's crazy nowadays because a lot of traders, like, they may even have, like, a real house edge in front of them, like, a real strategy that works. And I tweet this all the time as well. Like, I could give, like, 90% of people, I could give everyone out there, right, it's a strategy that works. Like, we'll say 70% win rate, 1-to-1 risk reward, guaranteed to make money in the long run. But, like, 95% of people won't be able to stick to it. They'll get emotional. They'll say, oh, like, whatever, like, I don't want to trade this. Like, I'll go trade this. And people just can't stick to it. First off, like, they don't have an edge. And then if they do, they can't stick to it. And if you're able to do either the opposite of those things, like have an edge and then stick to it, you're going to make money. Like, statistically, that's how it should work.
For sure. I think it's been really cool because, like, I've interviewed a lot of traders in the past, like, 2 weeks. And, you know, for me, like, I'm right at that point where it's just my emotions that are lacking, and I'm actually getting, like, a discipline coach just to help with that, because I think it's, like, tough because it's, like, it's definitely, like, a pride and ego thing where it's, like, oh, like, I don't need someone to, like, tell me, because it's outside of trading, realistically.
Right.
It's, like, I don't need someone, you know, to tell me how to, you know, be disciplined and, like, how to structure my routine. Like, it's definitely, like, an ego thing. And I was like, man, like, but really, like, I'm the only one holding me back. Like,
right.
My edge is there, but it's like I make some money and then I give it back. I make some money and then I give it back. And it's like the only thing holding me back is me. And it's like, okay, I need to do something about that. And so, like, humbling myself enough to be like, okay, I need the external help. And, you know, I know that's going to go a long way. I think I had, like, a bit of a negative approach to that at first because I've had some poor experiences in the past, which I think some other people probably struggle with as well. But, you know, I would say, you know, find the right person and, you know, pay them. Like, you're not paying for their knowledge, you're paying for their wisdom. Like, you're paying for their experience. Like, you know, I know that you have a coaching program, and, you know, when people are coming to work with you, they're not learning necessarily your strategy. Like, yeah, you're going to share your strategy, but like you said, there's a lot of other strategies that you can use, but they're learning from your mistakes and your wisdom and your experience. And I think that's really what makes all the difference is, like, yes, that's going to shave time off of, you know, the amount of time that it takes to be profitable, but realistically, like, it takes time.
Right. And this is so I also had a mentor that helped me out quite a bit, and it wasn't necessarily the strategy. I didn't even end up using, like, half of the strategy stuff he taught me. But he did hold me accountable. He did say, like, Jordan, like, you're not following your strategy. You're not doing your plan. Like, what are you doing? Like, why are you taking that trade? And he really hit me, like, dude, like, you're messing up. And I was like, you're right. Like, I'm not following my plan. I don't have a idea of what I'm even doing. Yeah. And having that mentor really, really helped me out and really put me in the right perspective shift that I needed to become successful.
And I think just having that, like, you know, this is, like, so overused, but, like, everyone's like, oh, like, you know, the 4 or 5 people that you spend the most time around, you'll be the most like. So it's right. Like, if that means paying people to be those people around you, like, it's totally worth it, because it's 100%. True. Because, like, your friends right now are not going to be calling you out on, you know, oh, like, you didn't stick to your rules. Like, they don't care. Like, right. They probably don't even know what trading is, you know, realistically. Right. Like, if you're someone learning how to trade, you're probably not surrounded with other successful traders, realistically, right? So when you pay a mentor to learn how to trade, then it's like, you know, say someone's paying you. It's like, well, they're paying you probably to hold them accountable, right? So just you saying, like, you know, say, like, his name's Steve, for example. Yo, Steve, like, you broke your rules today. Like, what's going on? Like, and if you get that every single day, Steve's going to feel convicted. He's going to be like, damn, like, Jordan's calling me out every day because I'm not sticking to my rules. Like, I'm supposed to be sticking to my rules. And, you know, that makes all the difference.
Yeah. And that's literally, like, what I do. So we have, like, a accountability program in my coaching. And so I literally set it up in a way where I have students all the time who just DM me. So they have access to me. They just DM me and say, hey, like, I'm thinking about taking this trade, but I'm feeling a little emotional. And I'm like, dude, get off the charts. Like, no, like, don't take that trade. Like, you can't do that. And so having an accountability buddy is very, very important. 100%. You need someone there that can just tell you to, like, follow your rules, to just get off the screens when you need to not overtrade. That's extremely helpful when it comes to your trading approach.
Absolutely. And I think just, like, Yeah, like you said, like that accountability, that'll really make a world of difference. And I think another thing for me is, I had a mentor and still do. And, I don't see anything wrong with having like multiple, because they're all going to have a different, like I have one that's like trading, and this one's going to be like all for like psychology that I'm going to have. So like very different, like approaches to things, which I'm excited about. But with that, one of the biggest things that my mentor had told me is, he's like, look, like, you need to be trading like you are trading with like $1 million or like $10 million. Like, you're not going to be taking 15 trades a day, or like, you're going to trade a lot wiser. And I would love for you to elaborate on that, because I think a lot of people, when they get started, they get caught up with like, the more trades they take, the more money they make.
Exactly. I literally tweeted this like a few minutes ago. I said less is more, and it's never been truer for anything other than trading. And it's like, if you're gonna, the more trades you take is essentially telling yourself like that you have a high win rate, things are gonna work out. The realistic like approach is that you're very rarely gonna find like an A plus setup. And I talk about A plus setups all the time. You should only be taking A plus setups.
Mm-hmm.
If you don't see it, you shouldn't be taking that trade. And realistically, like, no matter what strategy you have, there's not going to be that many A plus setups every single week, let alone every single day.
Yeah.
And so people were taking 15, 20 trades a day, like even more than like 5 trades a day, like even more than like 3. Like, you don't need to be taking that many trades. And if you are, you probably don't have that defined enough of an edge where you're only taking the highest quality setups.
How many trades would you say you take per week on average?
Per week, I would say anywhere from like 4 to 10. I would say typically, I'm usually maxing out around 2 trades a day. Sometimes I'll take 3. I'll hold some swings as well, but I also have a lot of days where I don't take any trades. So it could be like 3, 4 trades in a week.
Gotcha. Yeah, I think that really makes all the difference. And it's tough, because like when you're starting out, you have $1,000 account or $100, like anywhere small account, and you're the emotions and the psychology really messes with you, because like you come in with $1,000 account, you're like, man, I want to make $100 or like $500, and like realistically on a small account, like, yeah, you do need either more exposure to risk, realistically is what it is, to make more money, and that's just not really sustainable long term.
Yeah, and there's a term for that I kind of call, it's called small account syndrome, and it's like, you have the small account, like maybe $1,000, $2,000, 500, and you're on Twitter, you're scrolling through social media, you see everyone making $500, $1,000, $2,000 a day, and so you start to think you can make that in a day. But if you have $1,000 account, like, you're not going to do that. Like, you should be making $5 off of that, or like $10, and be happy with that. But everyone just wants to get rich quick, and they don't understand, like, it takes time to build real wealth and compound your account.
Exactly. And it's like, it really is like risk management. It's like, the key to making more trading is more capital, not more risk. Like, you want to keep your percentages consistent with your risk. It's not more trades. It's, same A plus setups, and just more capital, right? You trade with 100K, you make 1% a day, you make $1,000. You trade with $1 million, you make 1% a day, you make 10 grand.
Right.
Exact same setup, and you could go to 10 million or 100 million. Like, the liquidity is there to, depending on, what assets you're playing, but the liquidity is there to play, really not infinite, but like you can scale up very dramatically. And, the answer is just, it's not trading more. It's just, more capital on a setup.
Exactly. And I tell people this as well. Like, if I forced you, you said you could only take 2 trades this week, like, they're probably going to be winning trades, because you're going to be very patient with what trades you're taking. And with risk management, like, it's so easy to scale in trading, and everybody focuses on the P&L. The P&L doesn't matter that much when you're just starting. What really matters is that you have an edge, you have a strategy, and you're sticking to it.
Yeah, and the percentage.
Right. And if you're risking, like, this is the thing as well. If you're risking like 1% of your account, or even like 5% of your account, and then you do that like 9 out of 10 trades, and then that 10th trade, you just risk 30% of your account, or you just do something stupid. Maybe you don't get out your stop and it goes past you, and that one trade ruins everything you've done for the past like 9 trades.
Yeah.
So it's very important that what I recommend is you risk the same amount per trade, whether that's percent of your account or same dollar amount. That's going to get you the most consistency and really help you see if your strategy works.
For sure. Yeah, because like trading is one of those things. It's like your trading ends when your discipline ends.
Right.
And it's like you could spend 5 years building up an account and you could blow it in one day.
Right.
Like, it's one of those things where it's like, one, you have to pay yourself. You have to withdraw money. It's not safe in your trading account when you can trade it,
Right.
to a degree. And, like I saw a tweet the other day. It was like you could, be on your trading journey, and one trade you could wipe out a day's progress, week's progress, month's progress, years,
Right.
all in one trade. So it's like, your discipline doesn't end. You have to be consistent with your risk. Otherwise, you are at risk of giving back your profits and, even your initial deposit.
Yeah. And I've seen it happen. I've seen traders like blow up months and, even like years of profits. It's not fun. It ruins your lives. It ruins like their family. Like it's a huge deal that a lot of people don't think it'll ever happen to them. But sometimes like you just wake up, maybe you had bad news the day before, maybe you're just not in the right mindset, and one by one it starts going lower and lower and you're not getting out, and then you just lose, you blow up your account. And you got to be very careful. You have to be very disciplined if you really want to make it in this game.
For sure. I know, like, even for me, like, I was trading this week, and like, I was in a trade. I had a stop loss, and it was like more of a mental one because I was trading options, so it's like tougher to have like an actual stop loss. Well, it was like based on the chart, but it's hard to translate that over, especially with like TD Ameritrade. But I was like trading, and then I got like a text that it was like basically like emotionally stirring, and like literally it was so inconvenient. Like the same time I got the text, like my stop loss was like right there, and so like it blasts past my stop loss. I'm like reading this text, I'm like, what is going on? And like I ended up taking the trade for break even, but like I wrote it out way longer than I should. So like my takeaway from that is like, man, like I need to have my phone on do not disturb while I trade, because like stuff like that can happen. Like external stuff can happen like while you're trading, and like, it'll have an impact on how you trade.
All the time. And like it's rare, but there'll be days where I just wake up and I know like I'm not like emotionally there, whether it was news I heard, maybe I just like am feeling sick. It could be anything, but like if I know like I'm not in the right mindset to trade, like then I'm not going to trade.
Yeah.
So
and it's tough to have that discipline. Like it takes time to build that. Like realistically, discipline's a muscle, and you have to like work it and get better at it.
Totally. 100%. And trading is so like, it's so tough because like nobody wants to put in the work, and even if you do put in the work, like I said, you can still be wrong and like, or you can still be right, sorry, and lose money.
Mm-hmm.
And unless you like recognize that and say like, I need to really just hone down my emotions, make sure I'm disciplined, that's when you're really going to start to see success.
Yeah, and it's this weird like kind of balance where it's like, you have to put in your 10,000 hours, but just because you put in 10,000 hours does not mean you're going to be successful. It's not like, a doctor or a lawyer where you put in your time and then at the end of that you get a piece of paper that says you're qualified to make money, basically.
Totally.
Like there's no like piece of paper that says you're qualified to make money with trading. And like you could be making money for years and then like lose your mind,
Totally.
and like not be able to trade anymore. And it's one of those things where it's like hours do not equal dollars.
Right. And that was one thing I actually talked about on Twitter as well, is like the more work you put in could actually sometimes mean you lose money. Because what happens is, if I'm being honest, like 70-80% of traders out there are addicted to trading. I know I was hugely addicted to trading when I first started. And I didn't like really recognize it, mainly because I didn't want to admit it. A lot of people don't want to admit they're addicted to something, but they are. They stare at the charts all day. They're always looking for the next trade. They're always looking for that dopamine, trying to make that quick cash. And you need to step away and find something. Like trading cannot be your life.
Yeah.
And at one point it was for mine, and it ruined me. I was staring at the charts 24/7, skipping class to trade, like all terrible things. And it just caused me to lose more money. And when I really figured out, like, if I just don't have this as a top priority in my life and I can focus on something else, it makes it so much easier, because I can come to the market, after an hour. If I don't see any setups, I'm able to walk away. I'm able to say, I don't care if I make money today or not. I don't care. Like, I'm just going to go do this other thing.
Yeah. And like for me, like I started like this whole content business basically because of that. Cause it's like, I don't want to be like glued to the charts. So it's like, I traded this morning, had a nice setup. And then it was like, I looked at my watch. I was like, 10:15, I was like, I have a podcast with Jordan. I got to go get ready for other stuff. Like,
Right.
I'm done. Like, I don't have time for anything else. Whereas, like, if I didn't have that time commitment, maybe I'm sitting there, like, looking for more stuff. So I think having hobbies or business outside of trading is so important because it holds you accountable to not being on the charts all day. Because, realistically, you're going to get fatigued. For me, after about an hour on the charts, I'll get fatigued, and I just shouldn't be on the charts after about an hour.
Yeah, it's so key. And I set up my trade in a way where I'm really only on for the first hour, really like the first 30 minutes.
Yeah.
And so I kind of had my way where I can automate my trading. So even if I have a trade that runs throughout the rest of the day, I'm really only getting in the first hour. I'm really only looking at the charts the first hour. I set my stop. I set my target. I walk away. I go live my life. I do other things. I do like things that physically distract myself from the charts.
Yeah.
And
I think to like add to that is whenever you are trading, you're going to be emotional. Like it's going to happen. And that's why you have to make a plan beforehand. So for every trader that I've seen that is successful, they are making a plan before they enter into their trade. Okay, this is exactly how much I'm going to risk. This is how many contracts I'm going to take. This is what expiration I'm going to take. Or, if you're trading futures, like this is how many futures contracts I'm going to take. This is exactly where I'm going to enter. This is exactly where I'm going to get stopped out if the trade doesn't go my way. And this is where I'm going to take profit. And if you have that exact plan and you map it out before you get into the trade, especially if you like walk away, then, you're golden. Like I took a trade Tuesday and I got in it and like my plan was good, and like I was in the trade, I was like, man, like I don't know about this, like price is consolidating a little bit too much. And then I just like I set my targets and I walked away. I got a notification on my phone, my take profit hit. So it's like just you will have emotions in your trade, and especially if you're holding it for a longer period of time, especially if you're getting started, and you just have to create that plan and put hard, like this is my entry, this is my stop loss, that if price hits it, it'll take it out, not like I have to manually close it, and then this is my take profit. One of those two is going to hit eventually,
right?
Like your stop loss or your take profit's going to hit eventually, right? So set those in place and let it go.
Yeah, and like I'm in a trade right now, right? But I'm not sitting here checking my phone, making sure like what's gonna happen. Like I know exactly I'm either going to lose this amount of money or make this amount of money by the end of like the day or the end of day tomorrow. It's a swing trade. But it's like I'm not out here checking the 1 minute chart every single minute, like all making sure it's a win-win because you don't get emotions when you're not checking the charts, and you have the rest of the day to do whatever you want.
Yeah, that's why you have to come in with a plan of like, okay, this is how much I am going to risk and I don't care about, right? Like I'm not attached to say you're trading like 100K account, right? And you're risking $1,000, 1%. Right. Like, okay, I'm going to risk $1,000 and I'm not emotionally attached to this. If I lose it, I don't care, right? I'm deploying that risk in order to make 2% or 3%, right? So I risk that 1%, okay, here's my entry, here's my stop loss, here's my take profit, and your entry hits, it's like, okay, well, like, are you going to watch it and see if it hits your stop loss or take profit, or are you just going to let it hit your stop loss or take profit? Like, one of two is going to happen. So, either your thesis was right or is wrong. And if it was wrong, you go journal it and see why it was wrong and then apply it to your next trade. Right.
It's like you can't control what the market's going to do, and watching it is not going to change anything. So you might as well just let it either hit your stop or hit your target and then walk away, because like that's the best way to trade, and that's how you get rid of your emotions, pretty much.
For sure. And trading's just the markets are not a consistent place, so you have to bring as much consistency as you can. So like I know for me, like I like to show up every single day with the same amount of risk. I like to show up at the same time. I like to show up trading the same asset. And the most consistency I can have outside of, not even outside of the market, but within the market as possible, the better.
Right, exactly.
So, I know for you, like you probably have a handful of names that you stick to, an expiration on contracts that you stick to, and risk tolerance that you stick to. You said you like to trade like the first hour, so it's like you're showing up, and you have all these consistencies within something that's not consistent, and it makes a difference.
Yeah, it's a huge difference, because I used to, especially in the penny stock days, like you're looking at a new stock every single day, and all of them trade differently, all of them are moved differently, And when you're trading the same stocks, you kind of get to understand a little bit how they work. You get to understand the options a little bit better. Some stocks, like I know Boeing, options tend to decay a little bit faster. It's like weird, but like it's just how different stocks move.
Yeah.
So for me, I like to focus on ones that have a lot of volume in the options, so they're very liquid. I trade pretty much SPY and SPX every day. That's kind of the main ticker I focus on. There's other stocks I'll watch, but I got to make sure I'm sticking to ones that I know.
For sure, for sure. Breakdown, I saw that on your Twitter, you posted something like, there's like one strategy that you stuck to and used when you first got started to reach your profitability. So if you could talk a little bit about that and, kind of break it down, that'd be awesome.
Totally, yeah. So the main concept that I trade is supply and demand. When I first found out supply and demand like 3-4 years ago, I was trading with it for a little bit and it started to work. And then eventually I started losing money. And I was so fed up because I was like, I know the strategy works. Like, why am I losing money? And I figured out that supply demand by itself won't really work. You might get 50-60% win rate, maybe good risk reward. Most of the time, it's not going to work. And so what I did is I figured out, like, okay, I need to add other elements into it to make it a real strategy.
For sure.
And so I started, tweaking and tinkering with different ones, like trend, volume, and different indicators, all that stuff. And what I ended up doing right now, so my main concept, like I said, is supply and demand. I add in trend, I look at volume, and I look at market structure. So basically understanding like who's in control. Is it the buyers or the sellers?
For sure.
Like one like quick tip is like if I'm trading supply and demand, right, and I want to be looking to buy at demand, if price is in a downtrend, I don't want to be buying at demand. Because like if at some point supply and demand has to break, right? Price needs to, otherwise it's just going to be in the channel.
For
and
sure.
so one quick element such as like sticking to only buying in an uptrend and only selling in a downtrend increased my win rate by so much. And so once I started doing that, adding in volume, adding in market structure, a few other things, that's when my strategy really started to work and take off.
For sure. And I think like with that as well, the market structure side, that's something that I learned probably a little over 6 to 8 months ago. Before that, it was very retail concepts that I was using, which work if you're disciplined. It's just more of a broken strategy, in my opinion. Like SMC and supply and demand, it's just more refined, and you're able to usually pull out higher risk reward trades with an equivalent win rate most of the time to like a retail strategy. But, you just have a better risk to reward ratio. So it's like none of them work unless you're disciplined with them. But, with that, with supply and demand and like market structures, like I was learning market structure, and it's like there's a lot to learn at first. I think I also saw a tweet about this as well. It's like you really just have to spend a lot of time in the markets to understand like the difference between a stop hunt and an actual structural break.
Right.
And it takes time to kind of identify that, but once you do, you can get a feel. It's like, okay, like I was trading news today. I had a pretty good idea of what was going to happen based on like market structure and based on where the chart was going. I was like, okay, we're most likely going to like do a stop hunt here for news, and then we're going to go short. And we did that stop hunt and we went short. And it's like you kind of get an understanding of that, of where price is going to go based on the structure, and it just takes time of looking at the markets and watching stuff play out over and over and over and over again.
Right. And a big key of that also is education, because
Yeah.
I didn't even know what a stop hunt was. I didn't even know like, banks, like institutions are the ones like moving like markets. I thought it was just like your average Joe buying 100 shares that would make the price go up. But it's like there's funds out here putting millions, if not billions of dollars into plays and really moving markets. And when you understand like what retail is doing, it makes it so much easier, right? So like another strategy I kind of use is called balance theory. And basically it's the idea of like, it's kind of like support resistance, but it's a little bit tweaked in a different way. And when you start to understand how stop hunts work, that's how you make money, right? Because the way balance theory works, this is actually a trade I took on Roku recently, is price was kind of in this range, this tight channel, and it skyrocketed higher, and then immediately dumped. And so if you start to think like, a hedge fund, you start to think, okay, a bunch of retail traders push price up, or market push price up. A bunch of retail traders bought the breakout because that's a very common strategy, and now immediately tanked. A lot of them are underwater. So what do they have to do? They have to sell, and that's going to drive the price even further, right? And so when you start to understand things like that, you can start to say, okay, if I know a lot of retail traders are underwater and they need to sell their position, that's going to drive price lower. And then you can look to get puts and make money off that move.
100%. I think like with that, and something that I've been really liking for a strategy recently is like looking for that stop hunt, or liquidity grab is a term that I use. And you're just looking for basically a support or resistance, and then you're looking for price to break through that or wick through it and then like pull back. And something for me that I like to look for is you have that support or resistance, and then price breaks through it initially and then it comes back. And usually what's happening there is banks, institutions, or market makers are manipulating price past that area of support or resistance, and then retail's getting involved in the direction that it's being manipulated, because that's why it's a liquidity grab. So it's a stop hunt. They are the liquidity. Like retail is how these banks, institutions are getting a better price on their buy or their sell, right? Because if you think about it, retail shows up every day. They want to make money. Banks, institutions show up every day. They want to make money, but only one's going to, one has to lose, one has to win.
Right.
And banks, institutions have more capital, so they can, be a little bit more creative with how they can manipulate the market in order to take a position. So why would they not, manipulate the market in order to stop out retail so that they can get into their position at a better price to make more money? Like, it just makes sense. If I was in their shoes, I'd do the exact same thing, because I want to make money at the end of the day. That's why I'm showing up to the market. So they manipulate price. And then, for me, like I usually see like some sort of pullback from where they manipulated. And then, what you'll see is price return there to exit their manipulation. And I like to get involved where they're exiting that initial manipulation and then continuation from there.
Yeah, I mean they're buying your stops. It's
exactly.
Like that's what it is. Every retail trader, they see support like everyone knows where the stops are. You can see a very classic high, a very classic low, and there's going to be stops under there, because people just put their stops right above like pivot points, right under highs and lows. Mm-hmm. And so that's literally what's happening. Is price is going down, shooting below a low. They're stopping you out, and so when you get stopped out, you need to sell. Yeah. And so there needs to be a buyer, someone on the other side of that trade. Those are the guys who are buying all of those stop losses up and then pushing price the other way.
Exactly.
It's crazy.
Exactly.
Yeah.
Pure manipulation. So I would love to hear your thoughts. Like, I feel like anyone that is like successful in trades, like anything other than like a retail strategy, would tend to agree that like the market's manipulated.
100%.
Yeah. Like straight manipulation. Like I'm a believer in the fact that the market is like, the moves like each day are literally like planned out to a T. Like, the people pulling the strings know exactly where, every single candle. It's like a game that you get to like determine where price is going to go every single day. So I think once you kind of come into the market realizing that it's very heavily manipulated, you can use that to your advantage in your trading. 100%.
It's like if you can't beat them, join them, right?
Exactly.
It's like that's literally what you're doing. Is you're just learning how they trade and then following it. And like you can like it's real. Like I've talked to like market makers. Like you can talk to people who have like done this, and like they'll tell you like, yeah, like I would push price up and like sell it when everyone's buying, and like it's real. Like it's happening.
That's low-key
like,
so cool.
Yeah. So like,
how did you meet like a market maker?
All through Twitter.
Really?
Yeah, Twitter. It's I've just connected with so many traders on there, and you'll hear stories about people doing all sorts of crazy stuff. But yeah,
that's cool.
Especially way back when like now it's a little more regulated, but back then they had no rules. Like everyone was spoofing all the time. Like all this stuff, people were doing crazy things. Yeah.
Yeah, I would love to hear more about like some of those market maker stories. That's super cool. I didn't know. Like, obviously they're out there, but I didn't know like you could like talk to them. And,
yeah,
like,
there's different funds that are just calling each other up, being like, hey, I need to sell like X amount of shares. Can you like push price here so I can do that? And they all know what they're doing. They're all doing the same thing. Mm-hmm. They're working together to make money off each other. And they're at the same time they're making all these retail guys lose money. Yeah. But it's not like it's
not because they hate retail. It's just that like the liquidity has to come from somewhere.
Right. That's just how the market moves.
Yeah.
And so you may as well like learn it and take advantage of it instead of being mad at it.
Exactly. So it's like, if you are, retail trader, the market is manipulated against you. And it's like, it's not because like, oh, everyone's against retail. It's just because like they're taking advantage of the people that don't have as much money that can't move the markets.
Right.
Because, if they can get a bunch of retail involved in one thing, well, now they can become the liquidity for the move that they need to make.
Right.
And it's like they're simply just the moves happen because they're trying to make money. So it's like you said, you either you can't beat them, so you might as well join them. Like,
Right.
you're not going to be able to, fight against someone, putting billions of dollars into a trade. Like, you just have to play with them.
Right.
So
And
learn how they trade and join them.
yeah. And going back to like the casino thing, it's like if you are like a player, it's like you're not gonna make money like gambling, right?
Mm-hmm.
But there's certain things like you can try and like count cards, and there's like
Yeah.
card counters out there that they figured out how to essentially play with the house,
Yeah.
and now they make money. It's obviously it's not easy and it takes time, but like there's people out there doing that full time, making a lot of money from it.
Mm-hmm. Yeah, and it's like, bro, like even like banks, institutions, they're not winning every trade.
Right.
Like,
Yeah.
they just, but I guarantee you they're not showing up to the markets emotional.
Oh,
Like, they just have a very rigid plan and they're sticking to that. And it's like the odds are in their favor. So day in and day out, they're sticking to, their plan. So they're doing the best they can to win their trades at a much higher level. So they just have more resources to execute
Right.
with.
Right, and it's not even like they're saying like, oh, I'm gonna buy at the support level and sell here. No, they're thinking like, where can I get filled 10 million shares?
Yeah.
Where can I get liquidity?
Yeah.
And that's how they're trading. And if you can kind of figure that out, you're gonna start to make a lot of money in the stock market.
Exactly. And like if you kind of just think about like, I think just adopting the mindset of like, oh, what would a bank or institution do here can make a huge difference in your trading. Like, if you're like looking at a move happening, well, it's like obviously a bank or institution's not gonna, if there's a big sell move happening, they're not gonna sell in that move.
Right.
Like, one of two things are gonna happen. They're either not gonna sell that move, or they're gonna manipulate price and create an entry for themselves.
Right.
Right. So if the trend is down, okay, well we need to manipulate price in order to get retail involved so that we can, create liquidity to get into a position.
Right.
Because that's the only way that they're going to get a good price. Because if they just sell, just like if you were to, market fill a move that's already happening, you're going to get an awful price.
Right.
And for them, they're going to get an awful, awful price because they're the ones that's actually moving the market. So, it only makes sense for them to get involved when, they have retail or other institutions to buy or sell from where they're getting a reasonable price on things.
Right. And it goes back to the basics of like buy low and sell high. Like if stock is up like 30% in like a week or some crazy move, or even like whatever indice or whatever you're trading, like no institution is going to be buying at when it's all the way up there. They're going to push it down and then buy it lower. And do the same exact thing.
They're going to probably continue manipulating price up.
Right.
So that more retail gets involved, so they can keep selling to that retail, and then they're going to drop it.
Right. And then they're going to like do some like other methods to like manipulate shorts in. And then they're going to squeeze them out. And then, when the shorts are getting stopped out, then that's when they're shorting, and then they're making the move lower.
Yeah.
So,
I think one of the coolest things that I like watch is, and like obviously it's frustrating sometimes, but it's like when you look at the chart, it's like, okay, I think price is going to be manipulated like this. Like I remember FOMC, I think it was like 2 weeks ago or something. And I was like, all right, price is most likely going to be manipulated above this level, and then we're like going to go short. And price was manipulated above that level, pulled back, manipulated above again, pulled back, manipulated above again, and then went short. And then I was like, and then it came back the next day and then went short again. I was like, dang, I was not expecting that much manipulation.
Yeah.
And it's just like, it was really just like stop hunt. We played with structure, stop hunt again, another stop hunt, and another stop hunt.
Yeah. And it's all of it's connected. Like you'll look, they have so many methods too, like things like, upgrades and downgrades. Like those are literally just made for the market makers to push price. They can just downgrade a stock. Everyone that's going to freak out and sell, or they're going to get short, and then they're going to be the ones buying it. And you can just like look, that's honestly probably a strategy you could just trade. It's just after a bunch of downgrades happen, just buy it, and then price will eventually go up.
Yeah, so. I think like for me, I have my approach to news is a lot different than it used to be, and like earnings and everything.
Right,
I think everyone kind of treats them as a gamble because most people don't understand what's really happening, and like so to most people, it is a gamble. And obviously, you have to protect yourself when trading it because trying to get out when it's going the wrong direction, you're gonna get screwed.
Yeah.
But with news, it's like. Yeah, like, I look at news and people are like, oh, like, what's the sentiment or, like, what's the expectation or whatever. And I'm just like, I'm just looking for liquidity points.
Right.
Like, I'm like, where are the most people going to get stopped out? And like, how can I get involved there? Like,
Yeah.
I don't care about, how the news comes out. I just know it's going to be high impact, and it's an excuse to, heavily manipulate the market in one direction, another, or both.
Exactly.
And so it's like, how can I get involved? Like this morning, it was like, I don't care what the numbers for news are going to be. It's like, where is liquidity and how can I target that? And so it's like, I got involved, when liquidity was being swept, and then I got out when liquidity was being swept again. So it's like, news was used to manipulate that, and all it does is like when I'm in a position, it just plays out quicker.
Right. And it's not even also like there's always going to be that opportunity. Like, yes, market makers, like, they're moving markets every single day, like every minute, right? But that doesn't mean it's always easy to see. It doesn't mean it's always as, viable of an entry that you can get. It's not like, every single day I know exactly what they're doing. It's not like I'm come to the chart and I can see like literally what they're doing. Like, I don't know what they're doing, but I can kind of see with the chart like where they may want to get in and where the probability is going to be in my favor to trade with them.
Obviously, yeah. You have to employ risk management, regardless, because like, it's like, for me, it's like I have a good understanding, and like I was saying earlier, it's like my understanding of the market is good, but then I'll just give my money back sometimes because like my risk management isn't all the way there.
Right.
And so like you can be right 90% of the time, but if that 10% of the time you're not, and you don't have a stop loss, you can erase your gains very quickly. So, yes, there's a side of trading that's like, like you want to understand what's happening, and, strategy is important to a degree, but not as important as your mindset. Like, take it from me where it's like, bro, like I've been like studying the strategy, and it's like, I understand like to a degree, but I'm not where I want to be with profitability because of myself. And it's like, I realized that, fortunately. And, then it's about like humbling yourself, and I, humbled myself enough to go get a discipline coach to help me with that, which is like, it's not something that's like, oh, like I have a discipline coach. It's not something you want to necessarily like go brag about, especially like, for me being like 21-year-old kid, it's like, it's not like you won't want to go shout it to the whole world, So,
but those things are necessary.
100%.
And people, like, honestly, I've done some like crazy stuff. I've like woke up like before market open and like literally like wrote down for like 20 different times like I will follow my rules, like stuff that people look at you crazy for doing like stuff like that, or like literally like manifesting, like shouting in the mirror like I will follow my rules. Like, it sounds crazy,
you have to do that.
but it works. You have to do what you have to do
like,
to make money. Like,
literally. Like the problem is like in trading, you're your own boss, and so you are giving yourself the rules, so it's very easy to break those, right? When you go to work, like you go to Bed Bath & Beyond, they tell you what to do. If you don't do those, you get fired, right? But with trading, it's like if you lose your rules, then you lose money.
Right.
So, you're your own boss, and you have to like be very good at telling yourself like, hey, look, Cam, you need to do this, but then you actually have to stick to it, and you have to respect yourself enough to stick to it.
Right.
And, you can't, like, you have to do it day in and day out. And so if maybe that means like shouting your rules to yourself or journaling. Like, I used to like not think journaling was important. And then I was literally in the car with Umar Ashraf, and he was like, hey, Cam, like, are you journaling? I was like, no. And he was like, why not? Like, you should be journaling every single day. And he's like, I'm not saying that because I have TradeZella. Like, I'm saying that because this is, basically what helped me make $10 million trading. I was like, I'm going to start journaling every day.
Yeah. Yeah. It is so important. And I journal all my trades. I always review them. And like I said, going back, like, there's going to be times where, you're going to journal your trade. You're going to look at it, and you're going to be like, I don't think I did anything wrong here. Why'd I lose money? And you're going to scratch your head thinking like, oh, maybe I could have done this, could have done this, could have done this. But in the reality, if you followed your edge, if you followed your plan, and you saw less money, like, that's fine. And, it's knowing the balance between reviewing your trades and figuring out what you did wrong, what you could improve.
Yeah.
But also being like, hey, like, I took a loss today, and that's fine. And that's going to happen, and that's going to happen for the rest of my trading career.
Exactly.
But as long as I know that and I stick to it, I'm going to be fine.
100%. 100%. Well, I think we're coming up on like an hour here. So probably wrap things up here.
Yeah.
Really enjoyed this podcast. I always enjoy talking to another trader that knows what they're talking about. So, excited to put this together and release it, but appreciate you coming on.
Yeah. Thank you, Ken. Appreciate it.
Yeah. Looking to potentially shoot another one.
For sure.
Good stuff.
100%.